Okay, it says you are live, and good morning, everybody. Had some technical difficulties where if you guys have been watching me for any length of time, you know that that's really surprising because I'm a technological wizard. Okay, so I wanted to get on before NFP, but I'm not sure. I expected it to be a nothing burger because it's stale data, but I guess the stale data was good enough to imply whatever it's implying. I'm not sure if we're in the good news, bad news is good news, or what news is old news and what anybody cares about. But either way, the market likes it, so I like it. And I'm guessing, without seeing the numbers or anything else, that part of this is, as I said in my note, and as many of you know, once the unknown becomes known, the vol comes out of the chain. The volatility, the uncertainty pricing comes out of the chain. So even if this was somewhat within the range of what people were expected, the algos didn't get excited, whatever, the market maker hedging is going to change. Whatever hedging they have to do for long puts, whatever, vol comes out of those puts, those negative deltas decrease. They're less negative. A 40 delta becomes a 35 delta just from the volatility coming out, hypothetically. Plus, we move up a little bit, so everything shifts. So I don't know that this is, wow, these numbers are great. I think it's more post number adjustment. Of course, the conspiracy theorists in there are saying they're pumping it up to bring it down, or they're doing this to do that. They aren't doing anything. There is no they. There's no ghost in the machine. It's just a bunch of algos and traders, whatever, trying to make a living. Okay. Anyway, that said, I'll stop with that rant and go on to the next piece. And the next piece is, so here we are. Okay, we had that little pump. We're at 35 where we're supposed to stall. Oh, by the way, um, I'm sure many of you that watch aren't keenly aware of what my labels are. Is there a way to get an overlay to get your overlay of levels? I mean, my subscribers get this. I mean, this is the TV string that they get. I'm not sure exactly what you're asking, but I changed the wording of my labels to something more trader oriented rather than I kind of use idiosyncratic labels like I don't know, gateway plus gag zone, whatever, and I kind of change them around each day based on what makes sense to me. So bad hombre Chewy over there, who teaches the e-mini trading course, whatever, has suggested, why don't I use something a little more uniform that everybody understands, like target, downside, target. I never would have thought of something as target, and I have a few of my little idiosyncratic ones, support, resistance, key. Whoever heard of those words? Anyway, so this is available now as one of the trading view strings, as well as my own levels that have something that means something to me. Bottom of shop, support, EM bottom shelf, JP Morgan collar pivot, whatever. And you can put both on. As you see, I have both on. Just depending what makes sense to you. But since we're just gonna appeal to a broader audience, so to speak, of normal people. Wait, something is wrong here. Why don't I have the bottom here? Let's go back to something is screwy here somewhere. Let's go back to my stuff. Okay, there we go. I don't know, something happened. Yeah, that's right. Okay. Okay, so here we are at the top of the stall zone, whatever. And in case somebody was sleeping in a cave and didn't hear about it. Nvidia posted earnings and they beat them. Nice. Pretty sure if you're watching this, you heard of Nvidia and you kind of know what's going on. So, um, another quick snarky remark: price makes headlines. So we were selling off for a few weeks. I think a lot of it was largely structural, based into the volatility, the options chain, the options positioning, etc. CTA flows, volatility control funds, all that kind of stuff. And so as we started selling off, the media reached for a headline to explain the selling. And so, yeah, that added to the tumble a little bit. So now Nvidia beat, and so now we have to change the headlines, which is going to be now AI is alive and well. Okay, end of that disclaimer. Well, not disclaimer, that rant. All right, let me find what I'm looking for. Okay, switch screens, option depth. And this is my go-to along with this Spot Gamma and Gamma Labs and Mentor Q and TradingVolatility.net and Unusual Whales Periscope and Bar Chart CBOE, etc. So I use a lot of things to synthesize this, but this is kind of, the main thing. Options depth, and there's a discount link available if you want it. And okay, so here we are right around 35.40. And as you could see, we're in this little notch here. And like one of my former mentors used to say, trust your eyes are a great filter. You see, we're right in between here. So that's where we are, right in between here. On top is resistance or support, not really, but we'll oversimplify it that way. So as we get up here, market makers sell. I do this every day. As we move away from it, this is positive gamma, so then they buy to hedge it out, and we drift toward that level, pretending nothing else is there in isolation. Obviously, there's dynamics. When we're approaching a large level or a level from below, as we head to it, they go opposite direction of the move. They buy, but as we move away, they sell, and you create those kind of dynamics. Obviously, the bigger one here is a lot more weight and attraction and hedging required than the littler one down here. So we're stuck in this notch here, but this is small enough to get overrun relatively early, whereas this 6,700 is not, and people bought calls at 6,700 yesterday. Gee, what a shock. Actually, I did something similar with E-mini futures. I already sold them. With E-mini options, I already sold them. And we saw these trades coming in during the day. And so this is negative gamma. What does that mean? It means dealers hedge in the direction of the move. So as we go up, they buy. But if we go below it, they sell. There's one more but. But if we stay above it, let's just hypothetically pick the 6725 or 6700. Let's just pretend that right now the 6700 is a 65 delta. So for every X number of contracts, they have to keep Y number of E-mini contracts to hedge that. Well, that decays up eventually to a 1 delta, to delta 1 E-mini. So then they have to start incrementally buying E-minis as it charms up, sending us up as the day moves on, holding everything else in a vacuum. Just kind of explaining that dynamic. So that's where market makers are short gamma, customers are long, and assuming they hold them as they go up, market makers have to buy more, but as we drift to it, they sell more. So it's the opposite kind of action that we see with these. Hope that was clear as mud. Okay, so Yeah, the main action looks like it's going to be kind of around where we are now, 67, 35, 40, 50, up around here, down toward 67, 15, 60, round number down here, 67, 25. We have we have the, let me see if I could find it here, if I can get this to work. Yeah. We have the conveniently located 50 DMA right here at 6712. And that's obviously important. That's not rocket science to figure out that that matters. And so that takes us right into this zone here. Looks like somebody sold there, but the 345 contracts, that doesn't mean anything. That's nothing. That'll get eaten up. And that little shift you saw was some pre-market buying and selling. So base case 6,700 is the number to watch. Probably holds, and we chop in this zone 6,700, 6,750 ish. If below 6,700, then we could kind of tumble. I'm not expecting that. Leverage ETFs, I keep harping on them. So the leverage ETFs, TQQ, SPXL, the NVIDIA ETFs, whatever, they have to readjust at the end of the day. They have discretion anytime between 230 toward the end of the day, they do it. And when we've been going down, they've had to sell, adding to the cascade. But when we go up like today, leverage ETFs theoretically will be buyers. So that will add to a possible end of day pump. Now, let's throw something else in here. Again, if you guys have been frequent flyers watching my propaganda, you know that QYLD, those one of those leverage ETFs, which is different. It's an override ETF, not a leverage ETF. The leverage ETFs are 2 or 3x, whatever the leveraging. This is basically a covered call income thing. And they sell at the money options in the AM expiration, next expiration. So these are here for today, for tomorrow, actually, the AM expiration. However many calls there were about, well, there would actually, there should be OI of around 4,000.5 or something that they sold. They buy them back today at the end of the day. During, I think, 11 o'clock, I have to look at my notes. I think the buyback starts at 11 or 11:30. When they start buying all those positive deltas, buying slightly in the money NDX calls has a supportive aspect to it. That's just the way it is. Now, tomorrow, just fast forward on Friday, the YLD family of funds sells at the money options 30 DTE for the next AM expiration. That tends to have a suppressive effect. Doesn't mean we have to have a down day on Friday. Doesn't mean we have to have an up day today. Has an effect worth 0.2% move, 0.1, 0.3, 0.5, somewhere in there, depending on other factors. So pencil that into your background of your quant tuition thinking. Also, let's remember that YLD also sells covered calls on SPX, which is the XYLD, and RYLD for RUT, the IWM, etc. But they only do the buyback on the Qs, on the NDX. For whatever reason, go to their website, read it. That's just the way it is. Okay, so let's get back to what's going on right now. And so here we are in this zone, and there's really not much else to talk about. It's kind of simple. Let's just look at a few other things real quick. Is this what I want to look at? No. That's it. Okay. So let's take a look at what's going on here. Volatility, I kind of was expecting it to go below 20, and it looks like it's, yeah. All right, here it is below 20. I put it out in my note last night. 19. I'm expecting vol to continue to suppress. Yesterday, there was activity in the vol space, and VVIX went up, the volatility. But then when I looked, you know what they were doing? And I shared it on my Discord. They were buying puts. They were buying VIX puts for December, 20s and 18s. So the demand was for VIX puts as everyone was going crazy. So below 20, below 18 is where the institutions are betting, and not below 14 and a half, if you did the math. 16 and a half, 16 was kind of where they were betting we were going into December, Santa Claus rally, yada, yada, yada. So that's, so you have to, when you look at these VVIX or whatever, yeah, it's usually demand for calls, but sometimes it's a little more nuanced than that. Quantuition, that's my little tagline. Pattern recognition, math, numbers, and intuition. Okay, which is based on years of experience. Okay, let's see what's that. VIX 1-day, I think, is a totally useless measure. I'll give you my short version of it, because the way it's calculated, in the beginning of the day, it starts off like today's expected move. Then at the end of the day, the calculation drifts for tomorrow. And why did it spike to 27? I guess NFP and NVIDIA related. People were buying, I'm going to guess, remember, volatility is volatility, upside, downside. People were buying 6,700 calls and were maybe buying puts. So I'm guessing that for shorter term estimate, rather than using the VIX 1-day. And if you find it useful, great. You can just pencil that in. I like the VIX 9-day, which is somewhat of a shorter term thing, but then gives me a better look at what's going on. Now, we're not going to see this number until after the market opens. And what the VIX 9-day does is it looks forward 9 days from now. Then what's the options expiration the Friday before 9 days from now and after 9 days from now, which will be tomorrow and next Friday. No, next Friday is not. I think this is going to take this Friday out of the calculation, and that's the VIX 9-day. So that's what I like using to get near term and short term. Okay. By the way, we'll be launching a special, and sure you'll be talking about it a little bit, and I'll be over talking him and interrupting him probably, talking more about it. So I have a question here. I'm new to this. How does this relate to the market for options? If I have calls, buying happens after 11 today. So no problem. Yes. So how this way? Okay. So plain English. Large institutions going to be coming in at around 11:30. I'd have to check, and buying lots of calls on NDX. Think QQQ, think NVIDIA, whatever, think spills over into the general market. So whether you have SPY calls, Q calls, NVIDIA calls, which a lot of volatility is coming out of them, so that's a whole nother story. If you have calls, if you are long, that will help your long exposure, in theory, by about 0.2, 0.3% on the SPX or on SPY. So is that clear-ish? Meet me in retirement. I'm already there. Are you in retirement yet? Person's name is Meet Me in Retirement. See, I'm, okay, good. Yes, good. I'm glad. I'm already retired, so now I only work 12 hours a day retired as opposed to the 6 I did when I was working. Um, anyway, um, okay, so I'm gonna switch gears. Somewhat retired. Okay, yeah, well, I, I can understand somewhat retired. All right, so I'm gonna switch gears and take E-mini, put E-mini in there, and I'm gonna use our new labels, standard trader labels, I think, if I have them working right. Yes, I do. Here they are. Okay. Go ahead. Take it away, scalper.
Um. All right. Sorry, guys. I wasn't paying too much attention to what Dog was doing. I was getting my chart ready for this morning. So if I repeat anything, I do apologize. I am unsure a little bit about direction today. I think if we can hold here into open, here being 67.70 up to 67.80, even maybe 67.88, I'm not convinced we're moving up just yet. I'll be looking if we can't break 60, let's call it 67.90. I'm still expecting a downward move. Um, if we can hold 67, what did I say, 88, 90, if we can hold below that, I'll be targeting 67.22. So a decent move down.
Hold on, 67.22. Let me point to my chart. Well, that happens to be the bottom of the chop downside compass. Go ahead. Which is
Yep,
basically 6,700 SPX
6,700.
round number. Duh. Okay.
Right. Um, now I think this is a little less likely, but if we can hold below 67.20, we might even see, I hate to sound crazy, but 66.60. We've been visiting that level quite a lot, so I think that is in play so long that we hold below that 67.20. It's going to be tricky. We might be playing the range between 67.60 and 67.20 today until there is an expansion in either direction. And just to be clear, I am bullish into the end of the year. I just don't think I'm prepared for a downside move today, right? We want to be ready for either of that. Now, if we can break above that 67.90, 68.05 is definitely in play. I would just be watching a potential rejection at 6,800 first.
Okay. And now, I don't know if you see the chart here, but the chart based on gamma pretty much is the same levels, give or take a couple inches. Some of them are almost exactly the same level based on TA type stuff. So that's always good. And part of what we do in the scalping room is combine regular stuff with the gamma levels, because it gives a little extra conviction on sizing up, sizing down, entering or or exiting, etc. So yeah, so Chewy does the E-mini scalping and Q scalping, whatever, with futures, and has a course teaching you how to do that. I do the SPX stuff, iron condors and butterflies, and buying calls, short term, intermediate term, whatever, or puts, or I like flies a lot. Why use one option leg when you can use 6 to express the same idea? That's just how I roll. I don't know. So anyway, there's that. So how's that fair? You don't like that? How's that? Okay, so 11 o'clock, no matter where we are, expect us to start moving. And let me add a little color to what he's saying. And it's kind of what I thought I said before, but let me say it again this way with a chart now that we have that context. And I'll babble about this as long as people will listen. So we're around here right now. I don't know where we are. I'm going to guess we're around 40-ish, 67.40. So add 20 for E-mini. So we're right in this positive gamma area. This is where we're supposed to stall. Now, based on gamma alone, we're supposed to go up around here, stall, pull back and get sucked back up in here and kind of stick toward here. Now, the fly in the ointment, the turd in the woodpile is if, I don't know about you, but if I was short these options, I wouldn't be a very happy camper. So people might buy these back, although I'm pretty sure that these 6750s are the other side of a spread, 6700, 6750, or butterfly 6700, 6750, 6800, big institution, big money, whatever. I mean, it's no shock to anybody that's been paying attention that NVIDIA was reporting earnings and that they had sold off before earnings, so that we were probably going to go up. It shouldn't be a shock to you if that wasn't your base case, then I think maybe you need to go back to the drawing board. I hate to sound like that, but I just think so. So if we get buyers up in here and the volatility is going to come out of these, so when volatility comes out of those out of the money options, the market makers have to hedge less. So that could make this level a little less sticky. So, we could supersede it, but then you have all this. So, doubtful, but the top of the expected move was around 70-ish before. So we could, but I'm kind of with Chewy that hanging out in here in the 6750 to 6700, 6715 range, basically in the overnight range, kind of what makes sense. Now, getting back to your 11 o'clock question, at 11 o'clock, 11:30, I think the buying starts at 11:30, and what they do, I'll see if I can pull this up in a minute. What they do is they look at VWAP of that option at 11 o'clock, and they try to buy as close to the options VWAP at 11 o'clock price as possible when they buy back. Another nuance, if you want to track the VWAP of that option, I usually show a screenshot of it in my Discord, and I put it out on Twitter, and nobody, most people don't know what I'm talking about or why it's important. They don't have time to write out a whole explanation. But yeah, so that's what they try and do. So to tweak your entries, if you're already long calls, then depends if there's 0 DTE or December, whatever. So that depends on what you're doing. If you're looking to enter calls, I don't know that I would enter right at the open. Not investment advice, just kind of talking. I would build a fly because I love flies, and that's it. Okay, so I have called. What I would do now, again, disclaimer, I'm paper hands. Okay, I'm paper hands. I would probably, if I had more than one or one tranche or one thing, I would probably lighten up. That's what I would probably do. I mean, 6750, we're kind of there. We've kind of arrived at our destination. Now, it depends if you have in the money or out of the money or spreads or whatever to further parse it. But, 11:30 is when we get the surge. I would, I would probably look to sell near the open. I've got some long stuff I'll probably sell. I'd rather, okay, this is me again, and this is kind of not standard long scalping way of thinking. You know, they say let your winners run. I'd rather get the meat of the move. If, you know, the move is going to be whatever, I'll just make up a number, a double. You know, if I held on to it, I would have gotten the double. If I can get 70%, you know what? Fine, let somebody else get the other 30%. That's me. That's the best I could do. Super helpful. Thanks. You're welcome. You know, that's how I do it. But remember 11:30, so you can always get out and get back in. There's no law that says you have, once you sell them, you have to stay in them. Of course, I know that's becomes trickier entering them, but that's a whole nother thing and how we look at things as traders. So in the meantime, unbeknownst to us, while I was babbling, and you could, you know, roll them out. I mean, I've got my shorter dated stuff. I'm going to look to September 31st. End of the month looks interesting to me. And we'll talk about that. I might as well talk about that now, right? While I'm in the neighborhood. So why does the end of the month look interesting to me? Hands up. Anybody know?
OPEX.
Okay, so after OPEX tomorrow, we have end of month OPEX coming up November 30th. What happens between now and then? We have Thanksgiving, Santa Claus rally. We have a couple of extra days of low volume and extra day close. That helps with the general decay of options going forward. I know it doesn't seem like a day or two of the market being closed and low liquidity, low volume matter, but according to Jim Carson, they do, and I believe him, and I've seen it happen. So I'm going to take it on faith. That's another reason. Last reason is once we clear out of this November OPEX tomorrow, then we're more free to move around the cabin. And I think that bias is going to be up. Once we cross above these moving averages, 67, 10, whatever it is, it's the 50-day moving average. Maybe people are going to be targeting the 20-day moving average, 67, 75, 80-ish, whatever that is. I think the natural drift is up, is chase, is, oh crap, I have all these puts that are decaying, all the people that bought fire insurance after the barn burned down, after the building burned down, or hurricane insurance after the hurricane are going to say, oh man, I did it again. You know, and whether they sell them, getting rid of those negative deltas that have to be hedged, or they leave them to decay, or just short covers, whatever it is, the bias is up. Now let's look at one more thing. I mentioned it in my note, but let's look at it this way. You know, and you know, in this racket, you have to kind of think on more than one dimension at once. Just like when you're a trader, you think in multiple time frames, you know, whatever your thing is, 5 minutes, 15-minute, daily, or whatever, you know, daily, weekly, monthly, yearly, or 15, you know, whatever your multiple time frame thing is. Kind of have to think of the dynamics the same way and size yourself accordingly. And so, with that said, and I'm just using gamma edge here because it'll be nice and easier to see. Let's go. Okay, so the 28th is the end of the month. And over here, I don't know why you can't see. Here they are. 67.55. Not the biggest strike on the table. But what do we see there? We see negative delta there. Why do we see negative delta there? JP Morgan collar. Very good. Now you're talking. That's my girl, Selena. JP Morgan collar. So JP Morgan in their regular collar trade, and it's kind of a little late to go through that, is basically a covered call fund, a collar fund. They sell out of the money calls to finance 5%, 20% out of the money puts every month. This month is the smallest one, the baby bear, so it doesn't matter as much. The Papa Bear for December is 6,700. That's what they sell. We're going to end up there because we always end up there. Not always, the vast majority of the time. So the question really, for my mind, isn't 6,750 over or under by the end of the month. It's at least 6,750. Then this likely becomes support. We have all these 6,800 calls up here that people bought. Do we get to 6,800? Well, we haven't. We were there not that long ago. We have stuff all the way up here at 6,850, whatever. So, yeah, the dynamics kind of point us up. Let's look at option depth view. Let's just see what's going on here for the end of the month. For the end of the month, we have customers long calls at 6,800. Long calls at 6,750. Here's a JP Morgan collar thing. So this is going to be a little bit of a battle, but we should get through it, etc., etc. We have puts down here at 6,700, at 6,600 that are decaying, sending us up. So shifting up and out, keeping some profit and rolling it into the end of the month or December. I mean, I'm going to do that with some of my shorter dated stuff. Just kind of makes sense to me. Fly it or whatever, or spreads so that decay doesn't, if when we stall whatever, doesn't eat you up. And that's kind of what makes sense to me. Okay, so do we have the special ready?
You asking me?
Yes.
Yes, we do.
Okay, can you tell us about it, and I'll tweak it, whatever.
Yeah. So if you want, just copy and paste it on the YouTube chat and on
X, right?
On X, right? But I'll run you guys through it real quick. So we're doing a half off for the annual membership. That brings and I'm talking about the Platinum Access. That brings Doc's service down to $49 a month. For the annual subscription, that does not require a code. It's just available now through Black Friday. And if you are looking for a trading system, the 8-day one-on-one price action boot camp is $750 off, bringing that total down to $1,750 at checkout. For that, you have to use the code Turkey. But if you have any questions or any issues checking out, please DM me or Doc. We'll get you squared away.
Okay, I'm just posting these things on social media here. Give me one more second. Got one more post to do. And yeah, so that's basically 50% off on the yearly. Pay monthly. You don't have to pay the whole year at once, because I know a lot of people don't want to pay. I don't blame you. Don't want to pay all that money at once. And so it's less than $50 a month, $2 a day. Not even a Starbucks. You have to go to Dunkin' Donuts and get a small coffee. And so I think it's a good deal. Of course.
You sound biased, Doc.
No, me? Come on. I'm completely objective here. But actually, I do think it's a good deal. But I am biased because I pay more than that for some other crappy services I never even look at. But as you see, I'm that guy that subscribes to everything. And if you don't believe it's not just here, just look at the Amazon boxes in front of my house. Am I opening any spreads today? Good question. Thanks for keeping me on my toes. I know you were working for a while. Are we still doing the 3-month special? DM me. I know you're here every day. DM me on Twitter or YouTube or whatever. You know my DM, and I'll work out something for you, just for you, as my dad used to say at the clothing store. But yes, we'll do a 3-month special for you. So you have my hold on one second. Let me do this real quick. How do I do this? I'm not that great at this stuff. So if you don't have my Twitter, which I would think you do, here's my Twitter, and you can DM me on Twitter or whatever, or on Discord, and we can talk about it, you know. Okay, so now getting back to the real question. Okay, Doc, that's really great. How do I make money today, right now? Okay, and for that, I'm going to take a look with you because I didn't really look at. You're welcome, Danny. No, I see you here every day for a while, you know, and that matters to me because really I just want to help people make money and learn. I like teaching. I taught graduate school. I've done motivational seminars. I like doing that. You know, pay it forward. I got mine, so to speak. Hopefully, it can help people get theirs. Both financially and as well as like internal rewards of just whatever. That's a whole nother story. Okay. So share screen, entire screen. Okay. So let's look at some trades for today. Oh, and I want to point something out here. NDX, see that? What they're buying back. Now I put my money where my mouth is, and I bought just small. Let's look at yesterday. Oh, let's go last 7 days. Okay. I bought the call that they were below the one they were short and sold the one that they were short, a 10 wide. What did I pay for it? I paid 526 for a double, and I sold the same option, the one that they're buying. I sold that put for a 10 wide, got almost $4 for it. So what could I lose? I could lose about $1,000 if I was dead ass wrong, minus the credit. So whatever that is, or I could make about $400 plus another $500, about 900. It was like a 1-to-1 kind of trade. I did this when we were in the toilet, bottoming out, and so, like I said, I put my money where my mouth is. Doesn't mean I'm always right, you know. Doesn't mean I'm always right. I just want to show people one more thing about that VWAP thing I was talking about. So you can view an option chart. Waiting for data. All right, come on. Oh, that's why it says today. That's why. Let's just do this. Okay. You can look at any option chart, and you can put VWAP on the option chart, and you can see where they're going to be buying it. So if we're too much above it, they're going to wait to buy it. If we're below it, they're going to run to buy it. Usually, on a day like today, they don't get below VWAP. If you see us below that VWAP, that would be a nice time for a long entry scalp into the day in SPX or SPY, whatever you like, I think. Okay. Let's get back to SPX and what I would do. Now, uncharacteristically for me, all I have is these December. I bought this thing, I don't even know when. You know, it was relatively cheap. I'm just going to leave it, you know, maybe it cost me $3 and it'll be $10 when it comes out, make $700. It was more for science than for anything else. So let's look at what we got going on here. So what would I sell? So let's go back through the logic chain because I like to teach. So certainly like to be below 6,700, even though it probably holds. We have one line of defense here at 6,880. We have that 6,650 area where we've been fighting. We've undercut this a few times the last few days. Is that going to happen again? It seems highly unlikely. Okay, so 6,600 below, no juice down there, too bad. 6,635. 60 cents for that, I'll take it. 55, whatever. And I would add to that. I know some people like to do 5 wides, which is, that's fine. If I were to do a 5 wide, I would probably want to go to be safe somewhere around here for 50 cents. Looks pretty juicy. 45 cents. Somewhere down here, depending what you like to take. On top is a little trickier, but let's just see. If I were to do an iron condor on top, I could go above 6,800, 75 cents. That's not bad. 70 cents, 85 cents. I'm going to put in one of those. 68, 10, 15 on top. And 66, 60, 65 around the 10, 11 delta, 9 delta on the bottom, and about a 7 delta on top. Remember, you could go a little closer on top. Really, we should stall out here. I just don't trust the bulls. So, I mean, could you go really over here? 68.05 for $1. That's not horrible either. Now, there's a whole nother way people like to do these. And now you could do a 5 wide and try to get kind of a third the width of the spread or close to it. So that would be something like this, 66, 80, 75. And on top, if I did something like that, that's about a third the width of the spread. That's not horrible either. So I'm going to throw one into those two. Now we'll see what happens. They'll fill or they won't fill. I'll make money or I'll lose money. And I'll manage them, I think probably all those trades look pretty good to me. I have most confidence in just selling out of the money puts. And I doubt we get to 6,800 today. So yeah. Flies, I didn't really think of a fly yet. I mean, I had fly. Let's go to put butterfly, I guess, because we're here. Now, obviously, that was based on, let's move the strikes way up. So do we pull back toward 6,700? Do we kind of get a stall out like this? How do I make it wider? For 40 cents, that's 50 cents. I'll take that right here, right now on a pullback. On the call side, do we think 50 is going to be sticky? Hell yeah. Do we want to make it a little wider? 70 cents? That's not bad. I want to move it up one. Same 70 cents. Gives me room over here. I'm going to do one of those for 65 cents. Am I playing for the pin on both sides? Obviously, we're not going to close in both places at the same time. I'm not playing these for the pin. Costing me 70 cents, I get out for $1.10 or 95 cents. God bless America. Same thing on the put side. I might build or add around them. If it looks like we're clearly going toward one or the other, I might hold them later. But that's kind of the way I do it. 9:21 already. This is supposed to be a half hour, but apparently it's not. Um, and so, okay, any final words of wisdom? Apparently not. Okay, trade safe, everybody.
Sorry, I was
Okay,
muted. I words of wisdom. Wait 40 minutes, 50 minutes before your first trade. That's my plan.
okay.
Bye, everybody.
And you're very welcome, Celine. Always appreciate your input and your passion. Okay, take care, everybody.